Lots of scary things happening out in the world, geopolitical fears, what's happening at the Federal Reserve, what's going to happen to the equity markets. All of these questions are on investors' minds right now. And of course, how is that going to affect the crypto market, which I assume if you're watching this channel, you're probably a cryptocurrency investor and would like to know, gosh, Lark, how is all this stuff going to affect my crypto portfolio? Well, in today's video, I'm going to be breaking all of this stuff down for you. My name's Lark. Every day I make videos talking about cryptocurrency investing. So if you like that kind of content, you like staying up to date with what is happening in crypto, then a quick tap on the thumbs up button to let me and YouTube know that you do like this kind of stuff would be super freaking awesome. By the way, every single week my team and I produce Wealth Mastery. This is a cryptocurrency investor report designed to help keep you ahead of the curve in this fast-moving market. Every single week you are going to be receiving a DeFi tutorial, an altcoin review, an interview with industry-leading projects, NFTs, token sales, airdrops, and much, much more. You can sign up for free using the link down below in the description. It's free. It's free. So go ahead and check it out using that link just down below me here. So let's go ahead and hop into this topic and just very quickly taking a quick look at the price here. So we can see Bitcoin got up to around $45,000 back here on the 10th, at which point we started coming down on geopolitical fears in particular, which we're going to talk about just here momentarily. At the moment, we are holding up on the 50-day simple moving average. Be nice to see us continue to hold above that line simply because this is one of those moving averages that I really consider to be super important when it comes to establishing a new trend, right? So if we can manage to hold above here and bounce up, then that I think is a very bullish thing for the price action moving forward. If we fail here, then obviously this was just a bull trap and we could be coming back down to retest some of these lower price points in the not so distant future if we fail to hold here, which of course lines up with key support around $42,500, $41,000, $40,000. We have lots of key support areas in this zone for price as well. We want to see all these areas holding. If we lose $40,000, well, things get pretty dicey pretty quick. So let's obviously hope that that doesn't happen. But right now we're still holding on the 50-day simple moving average, which is a good thing in my book. But why is the market so spooked? What has been going on? Well, one big thing that has been spooking a lot of people in the market, geopolitical fears in particular. People are worried about a potential war in Ukraine. The US has been saying that Russia is going to invade. The Ukrainians, the Russians, and the Europeans are basically all saying, well, no, that's not going to happen. But this level of uncertainty in the markets is the exact kind of stuff that markets don't like. We've seen the price of oil going up, for example, over the last few days. Was, people start to get these fears. Oh, well, what if a war does break out? Then, everybody needs to have their oil secured because obviously Russia is a massive oil supplier, oil producer, a massive gas producer as well, supplying a massive amount of Europe's gas, supplying huge amounts of oil into the market. So if there was a war and increased sanctions and all this stuff, all those markets could get affected and it could have a lot of knock-on effects. Anyway, beyond just how this could be affecting the markets, you do have people out there saying, well, this is it. This is going to lead to World War III. I don't think that's particularly likely to happen. Nobody really wants to see nuclear Armageddon come to pass. So, whatever does happens will have economic impacts, but that's probably going to be about it realistically for the international markets. We also, of course, have the inflation in the USA hitting 7.5%. We did talk about this a little bit the other day. I want to expand a bit more on this because one of the important things to keep in mind is that there will be a response to this inflation. The Federal Reserve will raise interest rates. The question right now is, of course, not whether or not the Fed is going to raise interest rates. The questions are this: How soon is the Federal Reserve going to raise interest rates? How much is the Federal Reserve going to raise interest rates? And how many times is the Federal Reserve going to raise interest rates? Those are the questions. How soon? Right now, looks like still March, although there has been a lot of speculation that there could be an emergency meeting, an emergency interest rate raise before March. Could happen, could not happen. It's just speculation at this point. How much? Well, remains to be seen. Inflation just keeps on a-soaring. 7.5% is a lot of inflation. Just for reference, if that inflation rate were to stay the same, then every 9 years, the purchasing power of your fiat would be halved. That's crazy, man. That is just your wealth right down the toilet. Right down the toilet. How many times is the Federal Reserve going to raise the rates by? Again, massive amounts of speculation about how many times it's going to happen. We have some people saying 3, 5, 7 times. 7 times at, 25 basis points at 0.25%. 5 times at 0.5, whatever it's going to be. We are going to see the interest rates go up to probably a couple of percent within the next year to 18 months, let's say. The most important thing we're looking for in this situation, clarity. Again, nobody likes uncertainty. So once the geopolitical stuff is sorted out in Ukraine and a diplomatic solution hopefully is reached and concessions are made, everybody's going to calm down and things will move on. Same with the Federal Reserve situation. Once the Fed comes out in March and says we're going to be doing this many hikes of this many basis points, and this is when the first one's going to be, well, markets are going to calm down after that point. You have to remember that historically, markets trend up during times of rate hikes. They don't crash. We don't usually experience dramatic crashes during this time. History has shown us that when the Fed starts raising interest rates, the equity markets go up. And right now, the crypto markets are super correlated to the equity markets. So if the equity markets are going up, crypto's going up too. Why do you think crypto's been down over the weekend? Equities started selling off over fears of the geopolitical risks happening in Eastern Europe. Crypto followed right along with it. Sad reality of what is going on right now, but we are heavily correlated to the equity markets at this time. The increased institutional adoption of cryptocurrencies is part of the result of this. Here's an interesting chart for you, though. Perspective, right? This is from Macro Charts. Important strength in growth stocks. Half of NASDAQ stocks have triggered buy signals. One of the strongest spikes of all time. You can see this is all the way back to the early 2000s. We had a big spike here. In fact, here's the current spike. The only times we had bigger spikes, for reference, back after the 2008 crash. Back here in 2011, you can see big crash followed by massive rally. Back here in 16, big crash, massive rally. Back here, and this looks about 19, big crash, massive rally. Early 2020, huge crash, gigundous rally. The biggest spike ever, massive crash, again, massive freaking rally. Spikes of this magnitude, they say, have led to historic rallies in stocks. A textbook bull market response after a sentiment capitulation. Follow the trend. Remember, we've established many times on this channel, crypto and equity markets are heavily correlated, and that correlation is increasing with time. Yes, there are times when they correlate less, but generally they move pretty close to one another. Now, Macro Charts also goes on to say that we could be looking at like a 2011, 2016 kind of scenario where actually we come back down and retest lows. As you see, we had the buy signals come in here, lows on the price actually being retested shortly thereafter. after. Now that is not what happened in all of these situations. That is worth pointing out here. As you can see, we had a lot of spikes where that didn't happen, right? A lot of spikes where it actually marked the time to, start off a new rally, essentially. But there are times when we did have the spike and then basically a capitulation shortly thereafter, followed by a massive rally. I also want to share this with you from the rational route. Perhaps we are simply in a phase of disbelief right now. We had our time of incredible fear in the market. Potentially our capitulation was the break under 33K for Bitcoin. Now we are actually in a period of disbelief where people are thinking, you know what, this rally is going to fail just like all the others. Bitcoin's going down to 10K. Everything's going to drop by 99%. It's all over. Sell now. Get out. World War III is about to happen. It's over. That's the sentiment of a lot of investors in the market right now. We could be in a disbelief phase. Disbelief phases tend to come just before massive rallies, before the euphoria phase, before the I'm a genius phase. Reality is, as always, the geniuses are buying the fear. The geniuses are buying when nobody else wants to buy. Not buying the tops, not buying when we are in the I'm a genius mode and everyone's buying the top. You want to be buying low, selling high, accumulating while we are still in these kind of positions with the Bitcoin Fear and Greed Index, with the equity markets, with the technical indicators, all this kind of stuff, showing that we are in a nice time to be accumulating, which of course what I continue to do. Continue to be accumulating Bitcoin, accumulating key cryptocurrencies, holding on to my altcoins, even though a lot of them are suffering a bit at the moment, we could say. Still holding on to those positions, waiting for the next rally when I will take profits on those, as I did during previous big rallies, chopping off portions of those bags, moving into stablecoins, moving into Bitcoin, taking it straight up out of the market, buying other stuff, buying stocks and whatnot. It's how long-term winning is done in this market. You have to remember a lot of the stuff is very speculative. Anyway, just my 2 Satoshis for the day. You let me know your thoughts on all of this fear that we see right now in the markets and whether or not it's actually time to be afraid, or is it simply time to keep accumulating? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.